The crypto world woke up today to a truly seismic development as SBI Holdings, the Japanese financial titan managing some $214 billion in assets and a steadfast Ripple ally, announced that it has formally filed for what would become Japan's inaugural crypto ETFs. In its Q2 2025 earnings report, SBI revealed applications for a Bitcoin XRP spot ETF alongside a novel crypto gold hybrid fund, a structure that would marry the stability of precious metals with the upside potential of digital tokens. What makes this so momentous is that, once approved and listed on the Tokyo Stock Exchange, these products will give both institutional powerhouses and everyday retail investors direct, regulated exposure to the two top performers in the blockchain space, and pave the way for the next evolution of mainstream finance in Japan. Appreciate the gravity of SBI's move. It helps to look back at the rocky, decade-long path that crypto ETF proposals have trod elsewhere. In the United States, asset managers have repeatedly courted the SEC, only to see spot Bitcoin ETF bids delayed or rejected time and again. Meanwhile, markets like Canada and parts of Europe have cautiously embraced digital asset funds, but they've largely focused on Bitcoin alone. SBI's dual asset and hybrid filings therefore signal not only confidence in the underlying protocols of Bitcoin and XRP, but also a bold willingness to innovate. Because it isn't every day you see a fund that blends gold-backed tokens with digital currencies, effectively giving investors a two-pronged hedge against both inflation and market volatility. It's no secret that market dynamics have been choppy. Since SBI's announcement, XRP has retraced roughly 3.5%, trading around $2.96, while Bitcoin hovers near $115,000. Ethereum, too, has eased back by about 2.6% to near $3,600. Heavy geopolitical headwinds, ranging from renewed tensions in Eastern Europe to escalating strategic competition in the South China Sea, have made investors skittish, and central banks' shifting stances on interest rates continue to fuel uncertainty. Yet, amid this cautious backdrop lies a glimmer of optimism. Goldman Sachs now assigns an 80% probability to a Federal Reserve rate cut as soon as September, and some market watchers even anticipate 3 rate reductions before year-end. Were that to occur, we could see a flood of liquidity into digital markets, and XRP, with its lightning-fast settlement rails and deep liquidity pools, stand to be one of the biggest beneficiaries. That on the political front, murmurs of change at the Fed add another layer of intrigue. Reports suggest that former President Trump has floated as many as 4 potential successors to current chair Jerome Powell, though no official replacement is expected before 2026. Still, the mere possibility of new leadership introduces an extra degree of volatility into global markets. Risk assets like cryptocurrencies often swing in response to Fed-related speculation, and even whispers of a hawkish or dovish tilt can translate into meaningful price moves. For holders of XRP, that means both risk and opportunity, as the token's history shows that it can surge sharply on positive regulatory or monetary news. Institutional activity around XRP has already begun to accelerate. Galaxy Digital, Michael Novogratz' flagship crypto merchant bank, recently disclosed holdings of over 15.3 million XRP, a clear signal that they're accumulating on any dips and betting on a favorable regulatory drift. Technical analysts are pointing to the emergence of an ascending triangle pattern on XRP's chart, a formation that, if confirmed by a break above its upper trend line, could propel prices beyond $4 and even into the $5 to $9 range. Of course, such upside hinges on a timely resolution to Ripple's ongoing legal battle with the U.S. Securities and Exchange Commission. But here in Asia, where regulators have tended to adopt a more progressive stance, SBI's ETF applications and the possible reclassification of crypto assets under Japan's Financial Instruments and Exchange Act combine to create a uniquely supportive environment. Indeed, The Financial Services Agency is reportedly on the verge of redefining cryptocurrencies from mere payment tokens to bona fide investment products. That would bring them under the same regulatory umbrella that governs stocks, bonds, and mutual funds, offering investors enhanced protections and clearer tax treatments. SBI appears determined to ride that regulatory wave, timing its ETF filings to coincide with the policy shift. Beyond ETFs, SBI's blockchain ambitions extend into stablecoins as well. The firm is developing both USD-pegged and JPY-pegged digital currencies and plans to deepen the footprint of Ripple's Lust token within Japan. These initiatives underscore SBI's conviction that digital assets will play a central role in the future of finance, from cross-border payments to programmable money. Should Japan greenlight these first crypto ETFs, the ripple effect, no pun intended, could be felt around the globe. Other markets, from Singapore to Frankfurt, may feel emboldened to follow suit, sparking a wave of regulated crypto investment vehicles that cater to both conservative institutional treasuries and adventurous retail portfolios. For XRP specifically, the broader availability of spot ETFs would translate into greater on-ramp liquidity, enhanced legitimacy in the eyes of skeptical regulators, and a smoother path to inclusion in diversified digital asset strategies. When you connect the dots, SBI's pioneering ETF filings, the potential for U.S. interest rate cuts, growing institutional stack-ups of XRP, and shifting regulatory frameworks in key jurisdictions, it becomes clear that 2025 could mark the year Ripple in its native token transition squarely into mainstream financial rails. The implications extend far beyond token prices. We're witnessing the gradual fusion of traditional finance and blockchain technology, a process that stands to reshape how capital flows, how investment products are structured, and ultimately, how value is created and transferred in the digital age. If you're as intrigued as I am by these unfolding developments, make sure to subscribe for on-the-ground updates from Swell 2025, exclusive insights on ETF approvals, deep dives into regulatory breakthroughs, and real-time market analysis. Drop a comment below with hashtag #ZerPet to let me know which of these milestones you're tracking most closely. And don't forget to hit that like button if you want more in-depth coverage of the next wave of financial innovation.